We are entering a recession, but home prices in America keep hitting new highs. What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. I have some good news and I have some bad news. The good news is that home prices in America surged in April faster than we've seen happen in years. The bad news is that the prices of homes in America are surging faster than we've seen happen in years. What? If you are looking to get a deal on your dream home right now, this is bad news for you. But if you're looking to sell your home right now, this is a dream come true. There's a couple reasons for this. Millennials started buying way more homes right now because interest rates were cut to zero, so people wanted to take advantage of these low interest rates. And the number of homes available for sale were cut by a quarter during this pandemic because when all these lockdowns started, people started taking their homes off the market because they don't want people walking around their property coughing all over the place. So, does this sofa come with the house? This created a 1-2 real estate punch because we have more people wanting to buy a home because of these low interest rates. We have this pent up demand to buy a home that was put on hold because of the lockdowns. And now we have less homes available for sale because people removed their homes off the market because of this pandemic. These three things came together to help push the price of real estate up. But this news comes with a caveat because CoreLogic, the company that did the study, also said that they expect real estate prices to start falling by next year because they think that this price growth is just temporary. And they're not alone. Zillow says the same thing. Zillow predicts that home sales will be down by 60% in the near future, and Realtor.com agrees. So you might not be able to get a sweet deal on a new home right now, but deals might be coming around the corner. You should also understand that these predictions by CoreLogic and Zillow and Realtor focus in on kind of just one thing: how likely people are to buy a home. These companies are saying, okay, the United States is entering a recession and tens of millions of Americans are out of a job, and banks are making it more difficult to qualify for a mortgage. So if less people can qualify for a mortgage or less people can afford a home, then you're gonna have less buyers out there to buy a home. So the sellers that are looking to sell their home won't be able to get a buyer to buy their home, which means that home prices will come down. But there are a few other factors that I'm paying attention to, and I think you should pay attention to as well. Right now, we have over 4 million Americans in forbearance, meaning they have put their mortgage payments on hold, and we have millions of tenants in America who are not paying their rent. What that tells me is that there might be a bigger real estate problem that's quietly brewing in the back. To be fair, 4.2 million Americans put their mortgages on forbearance, but a new study came out and said that 70% of those people didn't actually have a financial hardship or need to put their mortgage on forbearance. They just did it because they wanted to use this as an opportunity to get a break from their mortgage. Hey Gucci, your store open yet? I got some extra cash. However, that still means that more than 1.25 million Americans would have been in default on their mortgages if it wasn't for this forbearance program. That's concerning because if the economy stays slow, then people won't have an income coming in, which means it'll be harder for people to make their mortgages, which means we could see an uptick in foreclosures in the future. To put it in perspective, during the 2008 real estate crash, about 3 million Americans defaulted on their mortgages in 2008, and right now in 2020, it looks like about 1.25 million people would have been in default in 2020 so far. The economy is fine, Jaspreet. Just look at the stock market. Well, the economy and the stock market don't always go hand in hand. The stock market got bailed out by the Federal Reserve Bank. The economy is whether you're getting a paycheck or an unemployment check. And right now, tens of millions of Americans are not getting a paycheck, which means the economy is hurting. But we also have a landlord dilemma that very few people are mentioning. I am a real estate investor. I love investing in real estate. I actually prefer real estate investing over the stock market. But when I buy real estate, I only look for steals. I try to buy real estate below market value. All of my best deals come from buying properties off of other real estate investors who took on too much debt and didn't know how to manage their properties. Many of these people get caught up in that buy real estate with no money down game. If you are involved in real estate in any way, shape, or form, I'm sure you've heard that pitch before. And so they buy real estate with no money down if possible, and they leverage themselves up to their eyeballs, many times with no experience on how to actually manage a property. So they go out and buy this apartment complex, or they buy some real estate, and then some tenants move out, and now they don't have enough money coming in to make their loan payments. Now they go into crisis mode. If this goes on long enough, then the banks are eventually going to take this property away from the landlord, and they're going to sell it for a huge discount, and that's where I come in and buy. Well, right now, if you own a home and you lost an income, chances are you can qualify for mortgage forbearance. If you are a tenant and you lost your job, chances are you can't be evicted right now. But if you are a landlord and your tenants are not paying and you can't make your loan payments, you're out of luck. Landlords who are over leveraged and don't have any savings cushions are now running into crisis mode, and so now they're suing courts around the country asking them to allow them to evict their tenants because they're saying that tenants are becoming squatters and taking advantage of the situation. Other states are opening up evictions, and experts are worried about a tidal wave of evictions hitting tenants. What this tells me is that landlords around the country are not getting the revenue they expected. Now, if these landlords are loaded up on debt with no savings, then depending on how long the slowdown lasts, more landlords are going to be pushed into default because landlords are not getting protections on their loans like homeowners are on their mortgages. I'll save how to manage your real estate investments for a different video, so if you haven't subscribed to our channel, make sure you do that. But what this tells me is that if the economy stays slow like this, we could see a wave of landlord foreclosures, which would bring in more sellers into the market. And more sellers could bring the price of real estate down. Now, obviously, this isn't guaranteed, and foreclosure is a very slow process. I mean, it can take over a year to really foreclose on somebody and get this property sold, which is why real estate prices move so much slower than stock market prices. During the 2008 crash, the stock market crashed in 2008 and then it bottomed out in 2009. But real estate prices didn't really crash until 2010 and 2011 and 2012. And by that time, the stock market had already fully recovered. What you want to do is understand what's happening around you. That way you can take advantage of the opportunities that come your way. And there are 3 things I need you to know. First, if you are a homeowner, this is one of the best times in history to refinance your mortgage. The Federal Reserve Bank slashed interest rates to 0 for the first time since the 2008 crash. So you can save a lot of money on your mortgage by refinancing to a lower interest rate loan. The simplest way to do that is by using a mortgage comparison website like our sponsor Credible, because they're free to use and you can make sure you're getting the lowest interest rate on your mortgage refinance. All you have to do is go onto their website and enter in a few pieces of information, which just takes a few minutes, and then Credible will present you with personalized quotes from different lenders. That way you do not overpay. Their service is completely free for you to use. It only takes a few minutes, and getting a free quote does not affect your credit score. So if you want to learn more and get a free quote on your mortgage refinance, I got the link to where you can do that in the description below. Minority Mindset is a partner with Credible, so if you use them, we will get compensated, but there's no additional cost to you. I mean, their service is completely free for you to use, so if you want to learn more and see how much you can save, I got the link to where you can do that in the description below. Second, if you've been thinking about selling your home, this is a great time to sell. Obviously, there's a chance that the real estate market will not get hurt at all and real estate prices will just continue to go up. But there's a lot of uncertainty in our economy right now. And we are in a seller's market right now, so sellers are getting top dollar for their homes. But you need to remember 3, that our economic future is uncertain. If our economy stays slow and unemployment stays high, that is going to be bad news for real estate prices. But it is good news if you are looking to buy a home for yourself or as an investment. The price of real estate is determined by supply and demand. When you have more sellers than buyers, the price of real estate will come down. If the economy stays slow for a while, then people are going to have a tougher time making their mortgage payments, and people are going to have a tougher time making their rent payments, which means we'll see more sellers and we could see an uptick in foreclosures. At the same time, if the economy stays slow, that means less people will be able to qualify for a mortgage, and at the same time, banks have already made it more difficult for people to get a mortgage because they have tightened their lending practices, so we could be seeing less buyers in the near future. If these two things happen, then we could see real estate prices come down, and if real estate prices come down, we could see sort of a repeat of what happened in 2008, although I don't think it'll be to that extent, but we could see people walk away from their homes again. Before the 2008 crash, there was this big push for 0% down payment homes, and so when real estate prices came down, lots of people just walked away from their homes because they don't have any equity or skin in the game. Now, it's nowhere near as bad, but the majority of people still are not putting down the conventional 20% to buy a home. Most people are putting down significantly below 10%, and lots of people are putting down just 3% to buy a home. Practically speaking, if home prices fall hard enough, again, big if, but if home prices do fall hard enough, then we could see people who have very small skin in the game walk away from their homes again if they feel like they're really underwater. Now, obviously, a lot can change between now and then, which is why it is so important for you to stay up to date on what's happening in the top finance and business news. And if you're looking for an easy way to do that, well, that's why we created our free Minority Mindset newsletter, where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet. That way you can be smart with your money. Our newsletter is completely free, and you can subscribe to our free finance and business newsletter by clicking the link up here or by clicking the link in the description below. By the way, our financial news emails are separate from our financial education emails. Thank you for watching. If you enjoyed this video, share it with one friend. That way we can help spread the word. If you want to learn more about how to refinance your mortgage the right way, I already made a video on it, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.